Good morning, class. Today we're going to talk all about costs. Costs are monies needed to buy, do, or make something. In accounting, we often use the word cost to refer to one-time events, such as the purchase of a car or a program, such as what is the cost of that program. Expenses are costs, but not all costs are expenses. An expense is a cost that is used up. So a nonprofit has revenue, which is the gross income. Then the nonprofit subtracts the expenses from this revenue, which gives us the net income. This, in effect, is an income statement. Accounting recognizes that there are costs which do not affect the income statement, and thus are not expenses. Rather, some costs just affect the balance sheet. We're going to talk more about that when we get into accounting next week. But this is the basic about cost. Cost objectives. Every cost is related to a cost objective or a cost object upon which costs are anchored. For example, a large multi-service nonprofit has many programs. If the director of the after-school program wished to enlarge his services, then he would assume the cost objective is the after-school program. Thus, the expansion would include costs of more staff and supplies, and possibly even more utility costs. However, the executive director of the nonprofit would say that is not the entire cost of the expansion. If the nonprofit were the cost objective, then the executive director would say that in addition to the costs of the program expansion for staff and supplies, there is the cost of the time used by the administrative apparatus of the nonprofit, such as the finance office and the ED's office, to help that program director expand his after-school offerings. And thus the expansions would cost more than the program director thought. It can get quite complicated. It depends upon the cost objective. Regardless of the cost objective, there are many different types of costs. Direct costs are those costs easily traced to a cost objective. In the example above, when the cost objective is the after-school program, then the direct costs are more staff and supplies. The indirect costs are not readily available or identifiable with a particular cost objective, but are necessary for the general operation of the organization. Indirect costs for the after-school program would be a percent time of the finance office, perhaps utilities, executive directors' offices, perhaps 5% of the finance office is taken up with program expansion. These would be indirect costs for the after-school program expansion. There are other kinds of costs, fixed, variable, and step costs. We can divide costs in other ways. Generally, the cost of any organization can be divided among fixed, variable, and step costs. Let's say I want to open a daycare center and I want to know how much the first year would cost. I would identify those costs that remain constant or fixed, regardless of changes in volume. Fixed costs would be the rent the nonprofit pays to rent the space. Variable costs are those costs that vary with volume, such as the food to feed the children, which would vary by the number of children. Other variable costs might be blankets and supplies. Then we come to the cost of teachers. We have to obey the state law that says there has to be one teacher for every 15 preschoolers. So if we have 20 children, we would have to have 2 teachers. That's a step cost, which is a cost that changes based upon a level of service, not volume necessarily. We do not necessarily use the idea of step costs. For most analyses, we just use fixed and variable, and we categorize salaries as a fixed cost rather than a step cost. In your homework, you will treat step costs as fixed costs. Now let's talk about average costs and marginal costs. The average cost assigns a cost to what is being measured by the number of units. In a nonprofit, the average cost of what it costs to run the after-school program is all the cost associated with running the program divided by the number of children in the program. The average cost can be manipulated for your purposes. For example, if my nonprofit is applying for a competitive government grant, I may want to keep my average costs quite low to beat the competition. I would calculate an average cost of $800 per child by not including all my indirect costs, such as utilities. If I included all my indirect costs, my average cost could be over $1,000 per child. This type of budgeting is common in the nonprofit world, in which nonprofits compete for governmental funds. Marginal costs are those added costs by adding one additional client or product. The marginal cost is quite incremental most of the time. Using the example of the child care center, if there were 14 children and one more child was enrolled, then that child is very much a marginal cost. However, if there were 15 children and one more child was enrolled, then we are dealing with a substantial increase in costs because we had to hire another teacher. Then there's opportunity cost. Opportunity cost is the benefits of an alternative that we give up when we decide for another alternative. The easiest way to explain opportunity cost is to think about your getting your MPA. During these 2 years, the opportunity cost is you passing up a job opportunity because you could not handle the additional workload of the new job and getting your MPA. Controllable costs. Controllable costs are expenses that managers have control over and can increase or decrease. The concept of controllable costs is widely used in government. Elected officials will often be quoted as saying, "We don't have control over large parts of our budget because of the union contracts. This budget is largely uncontrollable." Of course, under examination, that may not be accurate. Control can sometimes be in the willingness of the elected official to take controversial measures, such as during a fiscal crisis, insisting on renegotiating the contract. Nonprofits, most of whom do not have labor unions or civil service requirements, have a great deal of control over their budgets. That does not make decision-making easier. If the nonprofit is in the midst of a national recession and must cut the budget by reducing the staff, the fact that the nonprofit leadership has control is small comfort. Now I want to talk to you about cost manipulation. What most textbooks don't talk about is how much we manipulate the numbers in budgets. We used to joke in the budget office where I first started, "What number do you want?" when someone asks us how much a program costs. That is because fundamentally there has to be agreement about what the program consists of before calculating the answer. This is a very legitimate question. If a nonprofit is submitting a competitive grant proposal to a state agency and only a dozen grants will be given out, then that nonprofit has every incentive to provide low program costs so that the nonprofit is competitive. At the same time, if the nonprofit is submitting a proposal to a foundation and it is not competitive, then that nonprofit might wish to include all the bells and whistles that make the proposed program so special, and the cost might be quite higher than if it were a competitive grant proposal. There is nothing wrong with either approach. It is quite literally, what number do you want? In general, when dealing with budgets, costs are manipulated, and we need to be aware of it. Decisions about costing out programs can be quite important. That is why I like to see those who create budgets have a very close relationship to those who are operating the budgets. It's a serious mistake for EDs to keep budget and finance staff separate from program staff. They constantly need to share what they are doing and planning. Budgeting, including calculating costs, works best when those who budget take time to get to know what's going on the program side of a nonprofit. It's important to build strong communication between the two. So that's the end of that, and we're going to deal with the homework. You can do it fairly easily, and I will see you in cyberspace.